So like I said, you guys started in 2019. You've been in it about 6 years now. What have you scaled to and how have you scaled there?
So we are, I want to say we're somewhere north of a couple thousand doors. I don't know the exact number. And the reason why is we do some of the condo transactions as well. Right.
So you're not buying and holding completely. You're buying and selling sometimes.
Some we hold, but I would say a good chunk of them now we're buying in college markets, call it for, again, 140, 150,000 a door. We'll put a big chunk of money into rehabbing them, fixing up the amenities. We've gotten pretty good at that. We'll put the jumbotrons and the golf simulator rooms, all kinds of cool, fun stuff.
Some of the stuff you have shown me has honestly blown my mind. I mean, you just think you think apartments, you think of like, just regular apartments somewhere you go, but now they have golf simulators. Like you said, you got the stadium views from the pool for the big screen TVs.
I would live there, right? If I wasn't married, I wasn't, in my 40s and all, like, I honestly, I would have zero problem living at some of these properties. Like they've done it pretty well.
But the reason you do that, can you talk a little bit about the reason why you bring those kind of amenities to your projects?
Well, you want to stand out, right? And it's not just the fact of the amount that you're going to get for either the price point you sell them for or the rents. It's also the speed of sale and it's the speed of renting as well, right? You want to be able to, if it is a hold, you want to be able to lease these things up as quickly as possible. Yeah. So if you put yourself up a step or two above the competition at that same price point, simple common sense stuff, it should lease up pretty quickly.
For sure.
Right?
And with the multifamily, when the buy and holds, this is something that kind of blew my mind, which I didn't even think about. But so when you do add these things, like simple things like garbage pickup, right, from your front door, or adding these, amenities, just a little bit of bump in rent. That translates to hundreds of thousands of dollars in net worth of that project, right? Am I right or wrong?
Yeah, so I don't want to get too in the weeds, but the value of a commercial building is mostly dictated on the revenue of the building, right? It's not like
strictly numbers.
It's not a residential home. Your neighbors sell for more.
Right. You got comps. This house sold for this, so your house is worth this.
Yeah, there's a little piece of that, but the majority is based off the revenue. So when you take a 100-unit complex, let's call it, and you bump rents even $25, it doesn't sound like a lot, right? But extra $2,500 every month,
right,
at the end of the year, at a 6.5 or 7.5 cap or whatever, 5.5, whatever the market is you're in, that's going to have a pretty hefty impact. Now, if you can get into a project where you're bumping rents $100, $200, $300, right? We're putting washer dryer units now in a lot of our projects, even the ones that didn't have them. And we're charging a premium. We're charging $150, maybe some of them $200 a month.
Wow.
People are happily paying it.
Yeah.
But that $200 bump in the rent on 90 or 100 units is a massive impact to the value.
Yeah, that's one thing I did not realize. And when you broke it down for me, I was just stunned.
It's pretty crazy.
Yeah.
It is pretty crazy.